Hey guys, welcome back to the Capital Mindset Show. Today we're going to be revisiting another stock and kind of doing an updated analysis out of popular request. And I know it's because some of you, my European audience, I love you guys so much. And that is Asos. So Asos PLC, it is we'll take a look at it because it uses a different accounting method for reporting IFRS instead of GAAP. And there are some differences that I have discussed in the past. If you guys find value in this video, trust me, I know that, I was a little bit early on in making videos regarding this kind of stuff. So yes, the presentation might be not as good, but I did provide some interesting tidbits as to how to calculate free cash flow using IFRS instead of GAAP and how it's a little bit different. So I'll actually walk you through that in this video. So I'm going to actually pull it up and kind of pat myself on the back here. Well, not pat myself on the back, but I'll tell you what minute to go to, and if you're curious. And I'll show you even the title. So all you really have to do is go on YouTube and actually type in Asos Capital Mindset. You can see there up at the top. It's this video right here. So if I click on it, right, we go boom, and I walk you through around the 9-minute mark. You play around with it there, but around the 9-minute mark is when I do kind of discuss. If you guys are curious, again, go check out that video. So one thing I also want to talk about, we're going to get this out of the way before continuing with Asos, is actually this news that is pretty old. It's 1 day old, but what I'm saying is old is that, if you've been watching this channel, this is nothing new to you. This is actually information that could have been seen a while ago. And remember when we first talked about, for the returning viewers, remember the Wells Fargo reports, and we're going to see Wells Fargo actually report again this week, which is going to be interesting. But remember that Wells Fargo, of the big banks, they're the most exposed to home lending, and they are actually not the main drivers of home lending anymore. At least banks aren't, ever since around 2008. But of the big banks, they give us the greatest color and perspective into that. And again, I don't want to bore you guys again with the repeated information, but of course the demand is actually seeming to be drying up. Anecdotally, we've been talking about this for quite some time, how I've been seeing the change actually happen, and as well as some of the data and lending growth kind of decline and how that kind of manifests in the housing market, and that takes time. And now we're kind of seeing it, so the mainstream media is actually talking about it now. And I want to actually then say, you're seeing some YouTubers actually talk about it more often now, with Paul from Everything Money actually here saying buyers are backing out of home, cancellations are up. Quite literally, they probably read this same article and then are just kind of repeating it. But I want to say the information was out there, and there is content on it that's pretty old now. Again, we've been talking about the liquidity crunch since even a little bit in November, December, and January mainly on this channel. So, and I use the word liquidity crunch purposefully. All right, I'm just kind of repeating it for anyone new to join the channel. Again, you can ask any of my old subscribers. They have been bombarded with this information for quite some time. So I have full faith in every single one of them to be able to, address that. But yeah, that thing that pops up, it's so annoying. I have to delete it, but I'm just, taking my time. All right. Anyways, regarding not Paycom. Oh my gosh. I was talking about Paycom earlier with someone else, but Asos. So we have Asos PLC is actually trading at $11.20. And I'm actually curious what the price was at the time. So the price was about $34 a share. And we can kind of see some of the prices in the background. So at the time, a lot of people might have thought I was being too conservative. Fast forward to today, we are where we are now. So yes, Asos is trading at $11.20, and it is a value investor's favorite. There are a lot of interesting investors, and last time I checked, I think there were some super investors actually involved in this company. So I know of other YouTubers, because when I remember doing the research, as my memory serves me, we have someone like Hamish Hodder who's invested in this company. You could be buying this company today at a much cheaper price than what they were buying it at $11.20. And we actually take a look at that 5-year performance. It is down 84.87%. And over the maximum duration, it is only up 11.95%. It appears to be extremely cyclical, or at least I'm sensing a pattern here. I'm sensing a pattern of cyclicality, and I'm just playing around here. But yeah, you can kind of see how it's kind of playing out. Now, this is no determination as to what's going to happen into the future. It might not recover from here. It might be that the jig is up. It's over. All right. So as you guys know, retail is not my strength. Yes, I know. I'm uncultured when it comes to fashion. I wear gray shirts. This shirt I think is from Banana Republic. And it's just a gray shirt. I'm wearing gray pants as well. So that's it. As far as I might not be wearing pants, but as far as we got to have jokes. We got to have jokes. Sorry, for some of you, we got to have jokes. All right. But no, seriously, I might not. All right. All right. Anyways, so going to this company, this is a company that has a couple brands. We know of them as Topshop. So if we go to Asos's website, which should be easy to find, just click here. You go through this, you know, you can kind of see a lot of the marketing strategies that they try to do. They're trying to be new, hip, young, blah, blah, blah. Let's go to the men to kind of see what's up. What do they have here? 80% off everything. Nothing screams desperate. No, I'm kidding. No, but seriously, 80% off everything. Is this up? Okay, winner is, up to. Oh, okay. I see how they're doing things. But yeah, you can kind of see the style. Where's the Topshop style? Yeah, Top Man. Topshop, I think, is women. Let me go to women. So we see, where's Topshop? It's Topshop. 10%. ASOS students. I'm not a student, so. But if you're a student, 10% off. Our sponsor down below, Asos, right? They're our sponsor, totally. Okay, so you got all this. Let's go to brands. Let me click on brands, Asos. You can basically kind of look through this, see what their brands are. If you're more savvy when it comes to fashion brands, you might know what's better, what's worse. So just off of that front, I'm already hesitant for myself to put my own money into it. But this is not video so much about me as far as a video kind of updating you guys who have been asking for an update on this stock. Whether or not this video gets views or not is irrelevant. I'm just complying by you guys because you guys actually drive the content on this channel. So that being said, let's actually go to the evaluation model. So I've actually already plugged some stuff in, but we'll see. And to save us time, again, like I told you, I already plugged it in. And basically, we have a price target that is about $43, which is absolutely insane. I don't know if that's, porting incorrectly or there's an error going on there. But that implies a 289.76% upside according to analysts. But we don't have a rating coming in, so that's what makes it weird. Now, the Altman Z-score and the model's own measurement of bankruptcy risk, it doesn't actually come out as something determined. That's not necessarily bad, but, something to kind of keep in mind. Revenue up and to the right, we're not getting any analyst estimates from there, but for cash flows we are. Okay, so cash flows we are there. And actually, no, that's probably actually not porting in because that is sitting at 0. So that tells me they're not, no analyst estimates are actually porting in there. Shares outstanding has been rather tamed. They haven't really bought back any shares. They haven't been severe diluters, so can't really give or take away points there. Maybe the company's been focusing on growing the business. It does appear as though they have grown the business amazingly over the past 10 years. So credit where credit is due, which makes me question, why the heck do we see this performance? What is this? Was this like crazy excitement? I mean, this is insane. I mean, we're talking, one thing we have to consider, this is actually something that we must think about, is this measure. When we look at a foreign company, we have to pay attention to the actual currency fluctuations because that's a risk for us as an investor. So we're looking at it from the American's perspective, and we're investing in a company that draws much of its revenues in terms of British pounds. So we got to look at the pound, right? So if we look at the pound, let's take a look. And I know there are some of you out there that are my British audience because I do see the demographics, and I speak to some of you out there. So here you go. You might find this, okay, spare me if I'm using the word incorrectly, but actually, I'm going to actually find out if this is the proper word. So hopefully you find this in good spirit. I just wanted to make sure I'm using the proper meaning of the word, but I hope you find this perhaps a little bit cheeky. So apparently it means bold, brash, a bit rude, or maybe a little bit playful and amusing. So I think I'm using it correctly there. So you can't really criticize me for that. I know who you are, or you know who I am too, so we know who each other are. All right, but anyways, so you're looking at the relationship between the U.S. dollar and the pound, and then what do we see? We see that the U.S. dollar has been strengthening relative to the pound. So who's at risk here? Well, in reality, it's me who's at risk investing in Asos should this trend continue, because this will hamper performance of my investment. And so this kind of gives me some ideas as to what has been going on as far as the performance of Asos relative in U.S. dollars, right? So if I do expect the pound to strengthen relative to the dollar in the future, then this actually would benefit me as an American investor. In fact, I would be excited to buy this. Now, whether or not that will happen is a separate issue altogether. Or you might actually be able to get this company at such a steep discount that, it might outweigh the currency fluctuations. That can happen as well, but we got to be careful. It's something we just have to consider on top of everything else. So with that being said, I want to then, kind of remind everyone, this is the performance of it over that time period, over the past 10-ish years as measured by the ADRs, and the ADRs are in American dollars. I know now I'm not showing you in the British pounds, but at least we have the market cap in British pounds at 927 million British pounds. pounds, which probably equates to about $1 billion if I had to, do some mental math there. And let's go over to the valuation model again. We're seeing, oh, it's not a buy at all. Well, that's because actually we have to do the adjustments, yes and yes for this kind of company. And we do see, okay, well, now we're coming up to some semblance of normalization. If you recall, I had to do a similar thing manually in the last video, or some semblance of it. I had to do something with it. And it's pretty normal with a company like this, but I had to do it. Now I just have it automated, so I don't really have to do any mental work there. But we have a decent discount rate there. We can't assume 0% growth, but you can see that if there is an assumption of about 10%, 13%, or 15% growth there, it is looking interesting at the present moment in time. Now go figure, after a massive drawdown, again, let's review where we were. So we were around, where were we? Around here is when I covered the stock. So around 30, actually, let's see the exact date, November 29, 2021. And I came out of this video saying the stock is not for me. Other YouTubers were talking about it and saying it was an interesting buy. The valuation was good. And while the valuation was okay, I didn't think it was that good after doing the necessary adjustments that were needed, in fact. And so after doing those adjustments, not so happy with it. Now we are down quite significantly from that price. So let's actually kind of guesstimate it. It's around there, November right there. All right. So we're down about 65% since there. So go figure that the price looks better. Obviously it does. So this update is to kind of show you, yeah, it's looking better. I'm not really going to play around with these growth rates too much. I'm going to, keep the range. The range is pretty drastic and you kind of decide for yourself. The definitive, point for me is that I don't really like these kinds of businesses too much. For me, I know it's not my strength. So I kind of tend to stay away from them. But that doesn't mean there isn't value. That doesn't mean it's not for you. That doesn't mean that, you can't invest in this and make a ton of money. I hope you do if you are invested in this company. And you have to go further beyond this and do other qualitative measurements, such as what's the quality of the management? Is that good? But last time I checked, it was good. We did have the CEO retiring last time I checked, or that was from the last video. That's kind of what I'm going off of by memory. And so you got to see, is management the one that's coming on pretty good? If it is, great. You got to see, okay, what are they doing to expand into the future? Are they doing anything with inventory? What are they doing to manage the cost of inflation? What are they doing with their supply chains? All of these questions you have to answer before actually probably deciding whether or not this investment is for you. Off of memory, the company has been making that a bit of a focus as far as securing their supply chains, making sure that they can manage those costs so that if inflation occurs further, they're actually better positioned to kind of at least compete better against other retail brands. Remember that the consumer, at the end of the day, when you're doing kind of your marketing analysis, your SWOT analysis, so to speak, you got to consider what are your strengths, your weaknesses, and threats and opportunities, or opportunities and threats if you're going by the order. But you got to make sure that where you are and what you're competing in is you're competitive, right? So in the retail space, consumers care about the trendiness of the product and also the price of the product. Price actually does matter. So consider that as well. And then kind of do that analysis on your own. And then kind of from there, make judgments on whether or not the company's executing. If they are, all well and good. The company is a lot cheaper now. The company is a lot cheaper, and I stand by that. So I stand by what I said back then when the companies were more expensive. Today, we are far, 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 far lower in terms of price. It's a lot cheaper now, okay? What can I say? Were analysts correct or were they wrong? You be the deciding factor. But, companies like this, they're really boring. What excites people, what excites them is that electric car vehicle, which, by the way, because, if we have more to talk about, we have more to talk about, and that is Go EV. So we're going to talk about some Go EV. I'm going to make a video about this probably or more details in another one. So let's actually see what's up with this company. And this company has been on a tear today, up about 53.16%. And if we got to go scroll through the news, I'll be kind of seeing basically what happened. I was in discussion with some of you about this, but we do see that the company actually is going up because of an agreement with Walmart. And actually, let's click on that with CNBC. So shares of EV maker Canoo surge, and I love the name Canoo. It's kind of a weird name. Walmart agrees to buy 4,500 electric delivery vans. Okay, so I bet you there's more to the story than this, but so it's up to 10,000, and the vans are expected to go into service in 2023. What is supposed to be attractive about these vans, and I know some of you might be saying that's ugly, blah, 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 is the versatility of what it is. I kind of, it's not for me, the investment, I'll just be clear, but I kind of understand the product use case as far as what it would be used for, these delivery vans, so to speak. And yeah, you see it's delivery vehicles for the last mile, and I can see why Walmart wants to do it. You can kind of think of from the perspective of, hey, we want to be a more green, so we're going to use an electric vehicle fleet, all that jazz, all that advertising, etc. And maybe this is good for the company. So if you work for this company, great, good for you. Because I want to be very clear, this is something different from Arrival. Arrival is a similar company within the same space, but trying to do different things. So they're going about it differently, but this is actually good for the company. So good for you guys, the guys who run this company. I'm happy for you guys, and I'm not going to be investing in this. Let me be very clear, but just wanted to talk about this news and just get that out there. So with that being said, thank you guys so much for watching. It goes to show you that electric vehicles are the future, and you have to invest in them in order to become rich. And totally not an ironic statement.